Hey everyone, silver investors, we need to talk because today's move is not something you casually scroll past. Silver is sitting at about $83 an ounce right now, call it 82.99, and it's up roughly 2.8% in the last day. That is a big fast move in a market that usually doesn't hand you clean signals. And if you're thinking, okay, cool, silver's up, no, that's not the point. The point is what this kind of move usually means underneath the surface, who is getting forced, who is stepping in, and what the next window looks like for price to either continue or snap back hard. And I'm going to make this practical for you. Because if you're holding physical silver, if you're holding SLV or PSLV, if you're holding miners, or if you're just watching and waiting for a better entry, this is the type of day that quietly changes your next 3 weeks. Now, I'm not here to hype you up. I'm here to tell you what I see, why I think it matters, and what I'm watching next. Because this isn't just normal market behavior. 3 things are happening right now, and when they converge, you get exactly what we're seeing today. First, silver is outperforming gold today, and that matters more than most people realize. Gold is also up, but it's moving like a heavyweight. Silver is moving like it's been released from a cage. When silver starts leading, it's not just a precious metal story anymore. It becomes a liquidity story, a positioning story, a risk story. Silver is the metal that tends to get pushed around. Harder rallies, sharper drops, bigger squeezes, nastier shakeouts. So when it starts sprinting, it's usually telling you that something changed in the flow of money. Second, the macro backdrop is doing this weird tug-of-war thing where metals can rise even when the headline narrative would normally pressure them. Here's what I mean. When the market starts believing rate cuts are coming, metals often love that. When the market starts believing rates will stay higher for longer, metals often get hit. But right now, the story is messy. You've got strong employment signals and shifting expectations. Traders are recalibrating what the Federal Reserve might do next. And when that recalibration happens quickly, it can create sudden moves, especially in silver, because silver is so sensitive to positioning. Third, the silver market is still carrying the baggage of the recent volatility regime. If you've been watching silver the last couple of months, you know what I'm talking about. This market has been acting like it's in a new phase. Bigger intraday ranges, faster reversals, more emotional price action. And when a market enters that kind of regime, price doesn't move smoothly. It moves in bursts. It moves in squeezes. It moves in what just happened, candles. That's why today matters. Now let me show you how I'm thinking about this special update in plain English. No charts, no fancy jargon, just what actually matters for you. I've been tracking markets long enough to know that the days that feel too obvious usually have a hidden second act. Silver is up about 2.8% in 24 hours. That doesn't mean it can't go up more. It also doesn't mean you chase it blindly. It means you ask one question. Was this a breakout powered by real buying, or a move powered by forced buying? Because those are 2 completely different outcomes. If it's real buying, you often see follow-through. Dips get bought quickly. People who miss the move start piling in. And silver can run like crazy because it doesn't have the same depth and calm liquidity that gold has. But if it's forced buying, meaning shorts got squeezed, or stops got triggered, or leveraged traders got pushed out, then the move can stall, and you can get a brutal snapback that makes people panic. So what tells the difference? Here's the simplest way to think about it. A real trend move usually holds its gains. A forced move often gives you a fast spike, and then it bleeds back as soon as the pressure is relieved. So, over the next day or two, I'm not obsessing over one tick up or down. I'm watching whether silver can stay around this 83 zone and act like it belongs there, because that's what trends do. They normalize at the new level. Now, let's talk about the bigger angle that most people miss. Silver leading gold. Gold is around 5,056 today, up, but not exploding. Silver is the one moving with urgency. When that happens, you usually get one of 2 stories. Story number 1. The market is rotating toward hard asset beta. Silver is like gold's more aggressive cousin. If money is getting nervous about currency, debt policy, geopolitics, gold gets the first bid. But when that bid spreads and people want more upside, silver starts catching fire. Story number 2. Industrial demand expectations start influencing flows. Silver is not just a monetary metal, it's used. It gets consumed. It disappears into manufacturing. And when the market starts pricing future demand, or future supply constraints, silver can move differently than gold. Either way, silver outperforming is not a small detail. It's often the early warning that the precious metals complex is shifting gears. Now let's make this personal. If you own 100 ounces of physical silver, a move of 2.8% is not just numbers. At roughly $83 an ounce, that's a portfolio move of about $230 in a day. If you own 500 ounces, that's over $1,100. And if you're holding miners, the move can translate into something much bigger, because miners tend to behave like leveraged silver. When the market gets excited, they can run. When the market turns, they can get cut in half emotionally, even if the metal barely moves. That's why this update matters even if you're not a day trader. Because a lot of long-term investors in silver don't realize they're holding an asset that can behave calmly for months and then violently reprice in a week. Now I want to address something directly because I know what a lot of you are thinking. You're thinking, is this the start of the next leg higher? Or is this just another head fake before the next smash? And here's my honest answer. It depends on what happens next with the macro pressure points. There are two pressure points that matter most for metals right now. One, the direction of real rates and bond yields, because when yield expectations move, gold reacts and silver reacts even harder. Two, the US dollar, because a weaker dollar often acts like oxygen for metals. Now, I'm not going to pretend I can predict the next headline. Nobody can. But what you can do is watch how silver behaves around today's move. If silver stays firm, that's strength. If silver gives it all back fast, that's a warning. And here's the part people hate to hear. Both outcomes can still be bullish long term, because volatile markets shake you out before they reward you. That's the game. This is why I keep calling this a special update. It's not just silver is up, it's that we're seeing the kind of price action that tends to show up near inflection points. Now let's layer in the institutional narrative that's been building. You've got central bank gold buying continuing as a theme, and that matters because it sets a psychological floor under the entire precious metals complex. Even if you're a silver investor, you should care about gold's institutional bid, because gold is the anchor. When the anchor stays strong, silver has room to run. At the same time, there's been a lot of discussion about silver deficits and tightness, structural imbalance between supply and demand. And whether you believe every single bullish claim or not, here's what matters. The market is primed to react. When a market is primed, it doesn't take a miracle headline. It just takes a push. And today, we got a push. So what do you do with that information without making emotional decisions? Here's how I think about it. I separate silver into three buckets. Bucket one, core long-term holdings. This is the silver you hold because you want the insurance against currency risk, against policy risk, against the general insanity of modern finance. Bucket two, tactical exposure. This might be an ETF position or a miner basket, something you can adjust as the market changes. Bucket three, opportunistic capital. This is the money you only deploy when the market gives you a gift, panic lows, forced liquidation, or extreme sentiment. Most people mix all three buckets into one mental account, and then they get whiplash. A move like today is where that mistake shows up. Because if your core holdings are truly core, today shouldn't make you euphoric or terrified. But if your tactical and opportunistic plan isn't defined, you'll end up doing what most people do, buying after a surge or selling after a drop. Now, I'm going to give you the one question I think every silver investor should ask tonight. Not, where will silver be next month? Ask this. If silver pulls back from 83, will I view that as failure or as a normal retest? Because your answer tells you whether you're investing or reacting. Retests are normal. In fact, markets often do this. They break out, they pull back, they test the level they just broke, and then they decide. That decision point is where the next real move is born. So if you see silver wobble after today, don't immediately assume the rally is dead. Watch whether buyers show up. And if silver keeps running, don't assume you're too late. Watch whether the move is orderly or frantic. Orderly strength tends to last. Frantic strength tends to punish late entries. Now let me zoom out and give you a historical perspective, because it's easy to get trapped in today's candle. We've seen this playbook before. In 2020, during the chaos window, you got violent swings in metals. People thought the move was over, then it accelerated. People thought the crash was over, then it deepened. The key lesson wasn't predicting the exact day. The key lesson was understanding that volatility was the signal. Volatility means the market is repricing something. And when silver is volatile, it's usually because the market can't agree on one story. Is it inflation? Is it growth? Is it recession? Is it policy? Is it industrial demand? Is it monetary stress? When the market can't agree, silver becomes a battleground. And battlegrounds don't move politely. So here's where I think we are right now. We're in a decision window, not a one-day window, a multi-week window. Silver around 83 is telling you that buyers are willing to step up at elevated prices. The question is whether they can hold it. Now, I want to be very clear about something. This is educational content, not financial advice. Do your own research. Consult licensed financial advisors before making investment decisions. These are market observations and analytical frameworks, not buy or sell recommendations. But the data tells a story. Silver is up hard today. Gold is up. The macro narrative is shifting. Central bank demand themes continue. Structural deficit discussion continues. And competitors online are going to frame this as either the start of the moonshot or the start of the next crash. My job is to help you stay rational. So here's my solution tease, what I'm watching next and what I'll cover in the next update. I'm watching whether silver can hold this level into the next session, and I'm watching the next macro catalyst that could move yields and the dollar. Because the question isn't whether markets will be volatile. The math is clear. Volatility is here. The real question is whether you're positioned in a way that doesn't force you to make emotional decisions on days like today. And if you want more real-time updates and deeper breakdowns, I share them on social media and in premium research for people who want the early warning signals and the full framework, not hype. All right, before you go, 3 quick things. 1, drop a comment below. Tell me where you're watching from and give me your prediction. Where do you think silver is headed by the end of this month? 2, if you're not subscribed, hit that button now. I'm putting out unfiltered analysis consistently. And listen, I'm fighting copycat channels stealing this content. If this video provided value, comment real analysis so the algorithm knows you're here for the original. 3, next video drops soon, and I'm covering the one indicator that tends to show up right before silver makes its most violent move, up or down. Last time it flashed, the market didn't give you a second chance. You won't want to miss it. See you in the next one.